just had inflation drop, the latest quarterly inflation rate, which will feed into whether we get another rate rise, maybe more. Ross Greenwood, our business editor, is standing by. Ross, what have we got versus expectations as well, crucially?
Yeah, this is the important part about it. So the annual rate of inflation has dropped from 7.8% to 7%. The forecasts have been for inflation to be at 6.9% for the full period of time. So in other words, it's slightly higher than anticipated, and the annual rate of inflation remains at or above 7%, which of course will cause the Reserve Bank at least to consider seriously again raising interest rates when it next meets in the next week or so. Now, the important aspect of this is really about the driving forces of inflation. It's not disappearing out of Australia's economy, certainly not as quickly, but it is quite clear that inflation did peak in the December quarter. As we go through a little bit more of the detail, just having a quick look at the quarterly number. The quarterly number at 1.4% is there, you can see. And so as a result, it really is one of these points where it's not far off the forecast, but it's higher than the forecast. And this will certainly work into a whole bunch of other things you would imagine, including the money markets, the Australian dollar. All of these things will be affected by this because, as I say, it just shows that inflation is not going away. It's not dramatically lower than anticipated. And you can see here it has come off those peaks of 7.8%, but is still stubbornly high. And one thing to remember, and that is the cash rate. The Reserve Bank cash rate is 3.6%, whereas in America, if they raise rates again, it's highly likely that its cash rate above 5% will be very, very close to its annual rate of inflation.
So having a look at this as well, when we're seeing that, let's look at the annualised rate, if you like. So some of the big drivers, food and non-alcoholic beverages, 8%. Housing won't be a surprise there, 9.8% as well. Recreation and culture at 8.6%. Ross, when we're talking about the expectation there, you mentioned, so the markets had it at a 0.9% drop. Yes. And they also had the chances of a rate increase pretty low, I think, at about 17%. We haven't missed that expectation by much. But when you see 7% is still inflation and 1.4% is still the quarterly rate, I know we've got more rate rises to sort of the effect of them to flow through. It does give you pause for thought. Will the RBA really pause twice in a row?
Well, it's just interesting. I'm just having a look at the markets at the moment. So the ASX 200 ahead of this announcement was down by 21. It's now down by around 12. So it's sort of picked up a little bit. Aussie dollar before this was sitting around about 66.3. It's fairly steady. You can see there's the ASX now as we speak. We go to the Aussie dollar. We can show you that as well. And that is at the moment 66.25 US cents, pretty much flat. You know, it's rolling around the place as we can see. The other one I can show you, 2-year government bond rates. And I just want to show you this because this shows you where money markets really are at the moment. We can't see those. They're pretty flat at the moment, but that yield is currently sitting at around about 3.01%. Before this, 3.03%. So in many ways, it's suggested really, if anything, the emphasis is coming off the interest rate decisions and coming off money markets especially. So it'll just be fascinating. But you mentioned some of those issues as to what's rising in price. Just think about this in the past year. New dwellings up by 12.7%. You've got domestic holiday travel and accommodation up by 25%. Electricity up by 15.5%. And so you can understand even why the government today has come out and extended those caps out to 2025. But really, none of that is going to do anything because of exemptions where gas producers can sell at higher prices to take pressure off electricity or indeed to take pressure off domestic gas prices anytime soon. There is still inflationary pressures inside Australia's economy. This is one reason why the Reserve Bank is keeping that bias towards raising interest rates.